Alright, nth class, just like we said last time, I want to assume you're fine, and we thank God that you're okay. Yeah, the last lesson we had on our online teaching, we had this example and we worked it out. However, I want us to go through it and you know how we do it very well. So this is the example one. The following balances appeared in the books of Sycamore and Company Limited as at 31st December 2018. These are our particulars and the shillings. This business had opening stock 15,000, sales was 60,000, purchases 35, closing stock is 10, return inwards is 2,000, return outwards 1,000, carriage inwards is 15,000, and wages is 500. Carriages inwards is 1,500. Then wages is 500. And required is saying prepare their trading account. That is the owner of the business's account. And now here we always say it, when you are starting this number, ensure that you write the title in 3 lines. The first line is for the owner of the business, Sycamore and Company Limited. Limited is trading account for the period ending 31st December 2018. Like I told you, make sure you note for the period. When we are preparing the trading account, we prepare it for the period ending. So this is our trading account, which is looking like this as our formatting was. This is what confused you people, DR and the CR side. DR we say is debit, which is basically recording the expenses of the business. And this is where this horizontal format, this is a horizontal formatting which is divided into 2. We have the debit side from here and the credit side. That's why on the debit side we have particulars, amount in shillings, amount in shillings. Now we cross to the credit side, which is having particulars, amount in shillings, amount in shillings. The credit side means it is the side of incomes. That is where we record incomes, money that comes into the business. So we go to our number. We said it starts with opening stock. And our opening stock was 15,000, which we write in the second column. Maintain these columns. The first column is for all additions and adjustments, and the last column or the second column is where we put the final figure. So we are having opening stock, which is 15,000 in the second column. Now we have add purchases. In our number, purchases are affected. Remember, in the number we have carriage inwards, which is the transport used to transport the purchases. We add it onto purchases. We have the wages. For example, if you have hired somebody to carry for you the goods into the car, the vehicle, anywhere, you pay him some money for carriage. That is wages, you pay him. So we add it also onto purchases. However, remember we have returned outwards. When you had bought, then afterwards you returned the goods. Those ones we less them. So that's why we first put this information in the first column to get the net purchases. Hope it is clear. Now, we are saying add purchases 35,000. The add means we are adding this to opening stock, which is in the second column. So 35,000, we add carriage inwards, which is, carriage inwards was 1,500. 1,500, yes. 1,500, add wages, which was 500, less take note of this word, less, return outwards, which is 1,000. On your calculator, when you add, we shall be getting 36,000. And that figure, we call it net purchases, which we are taking in the second column because we said opening stock add purchases. So we write it there in the second column. So opening stock plus purchases, we are getting what we call cost of goods available for sale, which is 51,000. When you add the two, we get 51,000, which gives us cost of goods available for sale, less closing stock. In our number, it is there, it is 10,000. So when you less the two, we get what we call cost of sales, which is 41,000. Now, this side, we have the sales, which is 60,000. And in our number, we had returned inwards, which is 2,000, and we say 60,000 minus 2,000, we are getting net sales. Please, in the second column, 58,000. Now, if we only have sales, we take 60,000 direct in the last column because it will not be affected. If we only have purchases and there are no these others, we take this direct in the last column. Now, here is where there is a lot of work for us to get the gross profit, because we said to get gross profit, we shall say net sales minus cost of sales. According to this number, our net sales are 58,000 minus cost of sales we have calculated. Here, cost of sales was 41,000. So we get 41,000. You do this on your side work. And this one will give us shilling 17,000 as our gross profit. Come back here in our horizontal formatting trading account. The side which is bigger, this one is 58,000 and this one is 41,000. So you have to get the difference and put it on the side which is less. The debit side is lesser than the credit side, which is 58,000. So you get the difference, which we are writing here as gross profit carried down. We call it a carried down because we want this format, this trading account to balance. And our difference was 17,000. Gross profit carried down. Now, I believe they are balancing. You put the total lines on the same line. Put double lines on the same line. Double lines to put the total. 41 plus 17,000, it is now 58,000. And here we have already 58. Do put that line and say 58,000. What next? Now take the gross profit below, on the credit side, below the total. Below the total. And below the total lines and say gross profit brought down. Below the total, 17,000. And please, you can close your trading account. So that is what I wanted you to know, how we balance. The carried down is taken on the side which is less, and that is the DR at this time. After putting the totals, go to the next side and put the gross profit brought down on this side. Because it is a positive answer, it means we have a gross profit. However, sometimes you will get a negative answer. It means the brought down now, this time will be on the DR side, because expenses will be more than the incomes. Thank you so much. That is what I wanted us to review. And we can continue with our examples as I will be sending them to you in your WhatsApp group. God bless you.